Welcome to Adding Dollars. In this video, I'll be going over my update on the highest volatility stocks, so stocks that are paying the highest premiums for covered calls and cash secured puts. Before jumping into this week's scan, if you're new to cash secured puts or covered calls, make sure to check out the videos in the description. Now let's go ahead and jump into this week's high volatility scan. As always, I'm in the Thinkorswim platform and I'm on the scan tab, and I'm going to be scanning the S&P 500. If you want to see me scan a different list of stocks or hear my analysis on other stocks, feel free to leave that down below in the comments. I'm going to go ahead and click scan, and now we have a list of all of the stocks in the S&P 500 sorted by implied volatility, starting with the highest at the top and then descending from there. So at the top of the list, we have Super Microcomputer. Also, this is after hours data, so some of it may look different when the market opens or when this video comes out. We always look at Super Microcomputer because it's been at the top of the list for a while, so let's go ahead and skip that one and look at a couple of different ones this time. Let's look at Align Technology. Looks like it has earnings coming out on July 24th, currently trading at about $256.30 with an implied volatility of about 71%. I'm now going to jump over to the trade tab and we can go ahead and look at what kind of premiums this is currently paying out for cash secured puts and covered calls. I'm going to be looking at the 7 days out option, so options expiring the following Friday. And before jumping into the examples, I have this custom column on my platform called Percentage Premium that quickly calculates the percentage profit for selling a cash secured put at a specific strike price. And it also gives you an estimate for the percentage profit for selling a covered call at a certain strike price. If you're interested in adding this to your own platform, feel free to check out the link below that has instructions on how to add this to your own platform for free. Now let's go ahead and start with cash secured puts. It looks like you can make about 1% selling the $250 cash secured put, which means you would probably collect about $250 in premium for selling this. The risk here is if you did end up getting assigned on this position, you would need 250, which is the strike price, times 100, because each option contract is equal to 100 shares. So you would need $25,000 in order to purchase the 100 shares if you did end up getting assigned. If you didn't end up getting assigned on this position, then you would just get to keep the premium and the option would expire worthless. Jumping over to the covered call side, it looks like you could buy 100 shares right now for $25,630, and then you could go ahead and sell the 257.5 call options and collect about $490 or $500 in premium. So about 1.94% in 7 days for selling that call option. Let's go ahead and jump back to the scan tab and look at a couple more. Let's go ahead and look at Tesla. I feel like it's always in the news. Looks like it has earnings coming out on July 23rd, currently trading at about $241.03 with an implied volatility of about 70%. Let's go ahead and jump back to the trade tab and look at the option chain for Tesla. Again, looking at the 7 days out options, it looks like you can make about 1% selling the 222.5 cash secured put, which means you would collect about $226 or $228 in premium for selling that. But the risk here is if you did end up getting assigned, you would need $22,250 in order to purchase those shares if you did end up getting assigned. On the covered call side, you could buy 100 shares right now for about $23,675, and then you could go ahead and sell the 237.5 call option and collect about $1,055 in premium, or about 4.48%. The premium here looks pretty high, most likely because volatility is also high on this position, and potentially because earnings are coming up as well. Let's go ahead and jump back to the scan tab and look at one more. Let's look at Etsy. I don't think it's one we've looked at in a while. Looks like it has earnings coming up on July 31st, currently trading at about $58.31 with a implied volatility of about 66%. Again, jumping back to the trade tab, let's go ahead and look at the premiums it is currently paying out. Looking at the 7 days out options, looks like you could make about 1.2 0.23%, selling the $57 cash secured put, which means you would collect about $70 in premium. And the risk here, because this is a lower price stock, would be if you did end up getting assigned, you would need $5,700 in order to purchase the 100 shares. On the covered call side, it looks like you could buy 100 shares right now for about $5,870. And then you could go ahead and sell the $59 call option and collect about $98 or $99 in premium, or about 1.68% for selling that call option. On the covered call side, if you do end up getting assigned, your shares will get taken away, but you still get to keep the premium for selling the call option. And if your shares don't end up getting assigned, you get to keep the premium and your shares won't get taken away. And by taken away, I mean you are forced to sell at the strike price that you sold the call option at. Jumping back to the scan tab, feel free to pause the video and take a look at the full list of stock in the S&P 500 sorted by implied volatility. And if you have any questions or comments, feel free to leave those down below. And if you want to help support the channel, don't forget to like and subscribe, and I'll see you all in the next one.